Welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. It's great to be Friday. It's great to be here. It's great to be with you. Today I'm talking about three really interesting small caps. Yeah, three ones that are going to get you going on a Friday. And this week's beer is brought to you from up the road in Marrickville. Hope you can see that. New South Wales Eclipse Haze by Filter Brewing. No purple haze. Let's crack it. It's cracked. Yep. Not sure. Let's leave that one for a second. It's Forte Strong. Look, for all those of you worried about the economic conditions, don't worry. The great retailer himself, Gerry Harvey, reckons the chance of a recession is low, and that's because people have jobs. And let me tell you, he's right. The national accounts came out, and the press are talking all about recession. But don't believe the hype. Here, I'll come back to you. Let me tell you why Jerry's right, and that the risk is ultra low. Well, we've got an economy that is running hot, but it's running at half the pace in this last quarter that it was running in the first quarter of FY22. So it's still running hot, but the momentum's going the other way. And that will, most probably be reflected in interest rate declines in the back half, sort of towards the end of 2023. And what you've got to think about is making money. On that note, I've got three small cap case studies to give you something to think about over the weekend. One, Gentrack, ASX code GTK, technology company. Oh, I like this one. A, because I picked it. B, because I like the country it's from, New Zealand. And C, because it's doubled in less than 3 months, and I reckon there's more to come. Look, turnaround isn't just a Bonnie Tyler song. It's something we spend our waking hours looking for at Under the Radar Report. This stock has risk attached to it, as befits a turnaround. Especially when we first looked at it, in the middle of last year. Some of its major customers, UK energy retailers, went broke. That's right, they went broke. UK gas prices went crazy, and basically these customers had to take on board the higher costs. So the billing software business was under a cloud, or has been under a cloud. If that's not enough, the airport's customer management software it produces was hit by nothing less than global lockdowns. So these are big forces, but the key to this stock is it had a strong balance sheet, and it still does, net cash, and the UK energy market regulator instituted price caps. That was one thing, sort of protecting those UK energy retailers. And also, of course, the lockdowns have largely ended, or they have ended everywhere, even in China. So, most importantly, I might add that I like the CEO. He's a charismatic operator and he speaks really well, but he also delivers. So he says something and follows through. And I still like him, and this company is still going up. Number 2, Karoon Energy. Well, KAR is the code. I've talked about this a couple of times. It's a niche oil producer, and I've probably talked about it because we've more than doubled our money locking in profits a year or so ago, and then the stock went down and then we're back in it. So I'll keep talking about it, but the key word that I said before was niche. So the oil price ebbs and flows. It's quite volatile. Anyone can see that. But the key is twofold. They're growing production and they've got low costs. So when you're small in this world, you can take advantage of developing new assets. A lot more than the big guys can. A lot more. Because they're all trying to diversify out of fossil fuels, pouring their money into renewables to reduce their risk. But these smaller operators, Karoon, don't have to worry about this, and they've gone for broke developing oil fields in Brazil, and there's M&A activity on the way. So I also might mention that we have a very good resources analyst. This helps. This helps a lot in when covering resources companies. So we'll be looking at this one next week in the wake of Brazil's temporary petroleum tax announced this week, I think. But it's not in the same league as Australia's gas cap. Our resources guide tells me. So that's that's a weight off my shoulders. I can enjoy the weekend. The third stock. Let's keep going. The third stock. I can hear the drum roll in the background. Acrow Formwork, ACF. So it's a recent tip. It's been shooting lights out, 30% up or thereabouts. Check out the chart on this one. So we liked it because it has a great track record since listing of improving its return on equity. I keep saying that return on equity is a key. The compounding effect in small caps is unbelievable. Plus, there's a shortage of, and probably to do with the return on equity, but there is a shortage of formwork equipment, which underpins prices. And the company has also focused on building a team of design engineers, which gives it a competitive edge. And I love those words, competitive edge, because that's what you need when you're investing. You definitely need an edge. And the thing to remember is, don't believe the hype. Put your trust, put your belief in the fundamentals. You won't always get it right, but it's better than relying on a gut feel, believe you me, because it's sustainable. There's that word again. What's up next week? Well, we cover 25 stocks in depth this week in small caps and blue chips. And let me tell you, there's a lot to get through, but we make it very easy. Many are buys, so they're worth paying close attention to. And we'll be covering more stocks next week. That's an ironclad guarantee. So thanks for joining me at Biz with Rich, and I'll talk to you next week. Cheers.